is in your workbook, so it will be activity number 1. And in your answer book, you have your answer book. So here we have activity number 1, and you have the activity. Okay, so what does the activity say? So everybody, it's activity number 1 and activity number 1 in the general ledger. The name of this business is called Joss Traders. Okay, you have a vehicles account. Okay, let's just see what they say. Okay, some of them say they cannot hear properly. Okay. Okay, so let's look at the activity that we have. So this will be in your workbook where you find these information. It says that we have to prepare the following accounts. We have to do a vehicles account. We have to do a accumulated depreciation on vehicles. And we have to do an asset disposal account. And then we have to show the depreciation account. Then it says we're going to balance all the balance sheet items, the accounts. And we're going to close off all the nominal accounts. Okay, so you have to do the accounts from the 1st of March 2015 until the 29th of Feb 2016. So that will be your timeline. Okay, from the 1st of March 2015 until the 29th of February 2016. So all the opening balances will appear on the 1st of March 2015, and all the closing balances will appear on the 29th of February 2016. Okay. Then learners, they're giving me, it says, by the information, number 1, on the 1st of March, which is the beginning of the financial year. Okay. They're giving me the opening balances. It says the following balances appeared amongst others. So there is more balances, but they're only isolating the vehicles and they're only isolating the accumulated depreciation on vehicles. Okay, so I have to fill in those two balances in the accounts that's given in the workbook. Okay, so here we go. Right, so in the workbook, right, on the 1st of March, I write in the word balance. In the folio drawdown, 759,000. Okay, so that will be my vehicles opening balance given on the 1st of March. And in the same way, I fill in the opening balance of the accumulated on the 1st of March. Balance. Drawdown, and that figure is 297,750. Okay, those are the two figures that's given, so we're going to work with that. Right, so everybody's still with us? So just back to the information quickly. Then under so that will be those opening balances that we filled in over there. Then it says on the 31st of August. On the 31st of August, a vehicle with original cost price of 180,000. So let me just underline this because this part is important. That the original cost price was 180,000. Was sold on credit. So somebody owes me money, and that person I call a debtor. That means in the asset disposal account, I will have to write the words debtors control on the credit side. And it was sold for 100,000. The accumulated depreciation on this vehicle on the 1st of March amounted to 60,000. Okay. So let me just take that information and show you what we normally do, or what I want my learners to do. I tell them that in this balance of 759,000, we're going to split that figure into 2. Right? We're going to split that figure into 2. One figure is going to be 180,000 because that's the figure that they're giving us. Then you have, now the sum of this two must then equal to 759,000. Okay, so one is 180,000 because they're saying a vehicle with the original cost. So this is the cost of all the vehicles that you have. Okay. So I'm going to split the 759, the balance that's given, I'm going to split them in two. So if I take one of 180,000, then the other one will be 759,000 minus 180,000. It should give me 579,000. Okay, so what are we doing now? I'm now telling myself that now we have two vehicles. One vehicle of 180,000 that is given from the information, and the 579,000 you have to go and calculate because the sum of the two costs should be equal to the balance. Okay, so this one, 579,000, is the one that you have to go and calculate because they gave us the 180,000. So I'll just take the balance, 759,000 minus 180,000, and that gives me 579,000. So I'm assuming now that opening balance of the vehicles was two vehicles that they gave us. Okay, I hope that's clear, grade 11s. Okay, then in the same way, I'll go look at the accumulated, and I split the accumulated amount also in two. Okay, now they're telling me in the exercise that the accumulated at the beginning of the year amounted to 60,000. So I am at the beginning of the year. So one figure is 60,000. That means I can calculate the other figure, and that will just be 60,000 less. So that will be 237,750. Okay, so just again quickly, I take the opening balance of the vehicles and I split them into two. One with a cost price of 180 and one with the cost price of 579. But we had to calculate the 579, which was this, the 759 minus the 180. I'm circling the 180 because that is the one that we are going to sell, so that is the one that we're going to get rid of. So eventually now we can see that we have two vehicles, one that we're going to sell and one that will be remaining. Okay. Then in the same way, I circle the 60,000 because that 60,000 accumulated belongs to the 180,000. And whatever vehicle is left, 579,000, has accumulated of 237,750. Okay. Just check what learners are saying. Okay, the year goes from 2015 till 2016, so it will be the 20. Then we have some question here. Okay, so there's still some learners that are saying that they can't hear. Okay, we'll sort that out quickly. Then the activity says that we are selling it on the 31st of August. Okay, so on the 31st of August, we are going to sell this vehicle of 180,000. And also, the depreciation method is the diminishing balance. So my year started the 1st of March 2015. On the 31st of August 2015, I'm selling a vehicle. So all the asset disposal entries will have to be on the 31st of August 2015. But now I have to count the number of months from the 1st of March until the 31st of August. So if I count from the 1st of March to the 31st of August, I see that we have the vehicle for 6 months. So if we have the vehicle for 6 months before we're selling it, then it means that we have to calculate depreciation for 6 months only on the vehicle that we are going to sell. Okay, I'll repeat that. We had the vehicle for 6 months before we sold it, So therefore, we have to calculate the depreciation for 6 months only on the vehicle that we're going to sell. Okay. So if I look at it, that's the cost price of the vehicle that I'm going to sell. That is the accumulated depreciation of the vehicle that I'm going to sell. And the method of depreciation is 20% per annum on the diminishing. So if I calculate it on the diminishing, then on the vehicle sold, this will be the one that I'm selling, so I'll have to write off 6 months depreciation. It will be 180,000, that's the cost price, minus 60,000, gives me a total of 120,000. Right, so that's the cost price minus the accumulated. So where do I get that? That's the cost price minus the accumulated. So 180 minus the 60 gives me 120,000. Multiply by 20%, multiply by 6 over 12. So that gives me an answer of 12,000. Okay. So the 12,000 is the depreciation for the 6 months. Okay, so that will be your calculation. To see if we have this. Okay, so now we have to write off depreciation of 12,000 on the 31st of August, on that particular day. So how do we write off the depreciation? The two accounts that will be affected will be the depreciation account and the accumulated depreciation. So on the 31st of August, so it's August 31st, all right, the depreciation, that's the name of the contra account. It will be 12,000. Right. Then I'll go and complete the double entry, which is in the depreciation account. So it's August 31st, accumulated depreciation on vehicles, 12,000. Okay, so that will be the double entry for the accumulated depreciation over there. Okay, but hold on, now I can see grade 11 that the item or the vehicle that I'm going to sell of 180,000 no longer has accumulated depreciation of 60,000 only. It was only 60,000 at the beginning of March. The vehicle became an extra 6 months older before I sold it, so I had to write off 6 months depreciation. So the total accumulated is now 60,000 plus the extra 12,000, which will give me 72,000. Okay, so now we have to apply the asset disposal steps. Okay, so I'm selling this vehicle on August the 31st. But which one of the two are we going to take out? The one that we circled. Okay, so that I will have to take to asset disposal. It will be 180,000. So if I look at it, if I'm taking out 180,000, then only a vehicle with a cost price of 579,000 will be remaining. Okay, so if we're not going to buy any extra vehicle, then that should be the balance of the vehicle that will be left over. So now I have to complete that double entry, and that will go straight down to the asset disposal account. So it's going to go from the credit side in your vehicles account, and it's go on the debit side of the asset disposal account on the same day. So it's August 31st. It's going to be vehicles. And that is the cost. That's the cost price of the vehicle. In other words, that is how much the vehicle cost when we bought it new, and that was 180,000. Okay. In your folio, it will be general journal. In your folio, it's going to be general journal. So in your folio, it's going to be general journal. Okay, so just on the debit side of the asset disposal account, we now have the vehicle with a cost price of 180,000 that we are going to sell on the 31st of August. Okay. And if we look at the accumulated, then we see, okay, there was 60,000 at the beginning of the year. We wrote off an extra 12,000. So the total accumulated now will be the 60,000 that we had at the beginning of the year, plus the 12,000 extra that we wrote off for this year, and that should give you a total of 72,000. Okay. This is happening on August 31st because we're going to sell that. So I'll have to take the 72,000, I'll have to take it out of the accumulated and take that to asset disposal. Again, general journal in your folio. Right, then all we have to do, we have to follow the double entry. So we'll have accumulated depreciation on vehicles, 72,000. Let's see what they're saying. Okay. So on the debit side, I have the cost price. On the credit side, I have the accumulated or the total accumulated of the vehicle that I'm going to sell. Just to have a check so we can see that's a double entry. We have asset disposal on the credit side of the vehicles account. That's why we have vehicles on the debit side of asset disposal account. Right. Then on the debit side of the accumulated, we have 72,000. So on the credit side of the asset disposal account, you have 72,000. So that will be that double entry from there till there. And this one will come from the vehicles over there. Okay, so if I'm in my asset disposal account, I look for two things now. I have my cost price of 180,000. And I have my accumulated of 72,000. So I can immediately calculate what is the book value or the carrying value of the vehicle that I'm selling. So it's going to be 180,000 minus 72,000 gives you 108,000. So in other words, that vehicle that I bought for 180,000 is now worth 108,000. If I'm selling it for more than 108,000, I'll be making a profit. If I'm selling it for less than 108,000, I will be incurring a loss. So just again, it's 180,000, that's the cost price, minus the accumulated of 72,000, gives me 108,000. That is the book value or the carrying value of the vehicle that we are selling. If I'm selling it for more than 108,000, I'm making a profit, and if I'm selling it for less than 108,000, I will be incurring a loss. Okay? The activity says that we are selling it on credit. That's where the word debtors come from, and I'm selling it for 100,000. So I'm selling it for 100,000, but it's worth 108,000. If I'm selling it on credit, so you have to write the words debtors control on the credit side of the asset disposal account. I'm selling it for 100,000. Right. And as you can see, this gives me 172,000 and there's 180,000. So the missing amount will appear on the credit side. I'm selling it for 100,000. That will be the selling price. This will be my selling price. I'm selling it for 100,000, but it's worth 108,000. So I will be incurring a loss of 8,000. So that will be loss on sale of asset. Okay. Then we just have to total the asset disposal account, and you'll see both of them, the totals will come to 180,000. No opening balance, no closing balance. The asset disposal account is complete. Just once again quickly, the cost price was 180,000. The accumulated depreciation was 72,000, but remember, at the beginning of the year, it was 60,000. We wrote off an extra 6 months depreciation, which came to 12,000. So the total accumulated was the 60 plus the 12, and that gave me 72,000, and I brought the 72,000 to the asset disposal account. Then I calculated the 180,000 minus 72,000 gives me the 108,000. That will be the carrying value or the book value of the car. I'm selling it for 100,000, the selling price. Why do we write debtors? The activity says that we sold the car on credit. I'm selling it for less than what it's worth, so I'm making a loss of 8,000. Right, grade 11, that completes the asset disposal section of the activity. But the activity goes on. By number 3, they say that on the 1st of December 2015, a new vehicle was purchased on credit. So in other words, we're buying another vehicle. We're not paying for it, we're buying it on credit. So you cannot write bank in the details. So when we get to the vehicles account, we're buying another vehicle, but this time on the 1st of December, I cannot write bank because it says that we bought the vehicle on credit. So the control account should be creditors control. And that we buy in a creditors journal, and we have the cost price of that vehicle is 200,000. Okay, so here we have creditors control because we're buying a car. Here we have asset disposal because that is the cost price of the item or the vehicle that we're going to sell, and that was given, and we had to calculate that. So as we can see, it looks like we had at the beginning, it looked like we had 2 vehicles, and now we have a 3rd vehicle. But remember, we no longer have the vehicle of 180,000 because we sold that vehicle. So the only thing left will be the new vehicle of 200,000 and the older vehicle of 579,000. So you only have 2 vehicles left, one of 200,000, that's a new vehicle that you bought in December, and one of 579,000 that you had to go and calculate because it was included in the balance. Okay. Now the exercise goes further. They say that you have to write off depreciation on all the vehicles that is left over. So if we have 2 vehicles left over, we now have to write off depreciation on both of them. But obviously we didn't have both of them the whole year. So you won't be writing off depreciation on both of them for the whole year. One we had for the whole year, and the other one we only had for a certain number of months of this particular financial year. So you have to look at the dates because the dates will determine the number of months of depreciation that you're going to write off. So first of all, it will be the old vehicle that we have left over, which will be 579,000, and the new vehicle will be 200,000. If I go to the calculation page quickly, That was my vehicle that I sold. Now you still have an old vehicle. Right? So the cost price of the old vehicle is 579,000. The activity says diminishing balance. So we have to look at how much accumulated belongs to that old vehicle. And here you can see in the split it was 180,000 was the cost price of the vehicle that we're selling. 60,000 of that accumulated belonged to that 180. So what was left was the 237,750. So now when we get to the calculation for the depreciation on the older vehicle, it's 579 minus 237,750. Then we're going to get an answer, and then we're going to multiply it with 20% times 12 over 12, because we have the old vehicle the whole year. Right, so for that, we'll just go to the calculator quickly. It'll be 579,000 minus 237.50. Right, that gives me 341,250. Then we're going to multiply that with 20%. And the answer is 68,250. Okay, so that will be the depreciation on the old vehicle. Right, so now we have to calculate the depreciation on the new vehicle. Now remember, the new vehicle, you only bought it the 1st of December 2015, and the cost price was 200,000. Okay. And you are going to write off depreciation on the 29th or the 28th of February 2016, which means you only have the vehicle for 3 months, which is December, January, and February. So it's going to be 200,000 times 20% times 3 over 12. And then you get an answer. Right? Now, why do I take the cost price? The vehicle is new, and all the accumulated belongs to the older vehicles. That was the accumulated on the old vehicle, and the 60,000 was the accumulated on the vehicle that we sold. So when we have a new vehicle, even though the activity says diminishing balance, on the new vehicle you have to take the cost price because there's no accumulated. The accumulated belongs to the older vehicles and not to the new vehicle. So just for that calculation, it's going to be 200,000 times 3 divided by 12 times 20%. Oops, so that will be 200,000. Oh, I didn't clear. Okay, that makes sense. 200,000 times 3 divided by 12 times 20%, and that gives you 10,000. Okay, so that will be the depreciation on the new. Okay, so let's just go over those calculations quickly. 579,000, where does the 579 come from? That will be the older vehicle. So that will be the old vehicle, and this 180 will be the vehicle that we sold. Okay, so it's going to be sold, old, and then this 200,000 will be new. Okay, so we first did the calculation of the vehicle that was sold. 180 minus 60 times 20% times 6 over 12. We got 12,000. We made the entry for the 12,000. So the total accumulated was 60 at the beginning, plus the extra 12, which gave me 72,000. I brought the 72,000 to the asset disposal. Right? The cost price was 180,000. I calculated the profit or loss on sale of assets, which came to 8,000. Then what's left over, we have to calculate the depreciation on the older vehicle, which was 579. So there's 579 minus the 237,750 because it says diminishing. And I multiply that with 20% for 12 over 12. We have it for the whole year, which gives me 68,250. Then on the newer vehicle, I bought it the 1st of December. I have to write off depreciation on the 28th or the 29th of February. So I only had it for 3 months. So I calculate the depreciation for 3 months, and that came to 10,000. So these two will be one entry. There will be one entry for depreciation at the end of the year, and it's going to be 78,250. Okay, so the old and the new will be one entry for depreciation, 78,250, and the 78,250 is made up of the 68,250 and the 10,000. So those two items together give me the 78,250. Okay. So if we go back to the answer page, this depreciation will take place. Let me just get a different color to emphasize this quickly. This will be the depreciation that we have to write off at the end of the year. That is why it will be February the 28th or the 29th, depending if it's a leap year. In this case it is, so it will be February the 29th, and it will be depreciation. 78,250, which consists of the 10,000. First of all, it consists of the 68,250 and the 10,000. So you'll have the old vehicles depreciation and the new vehicles depreciation. Then the only thing left for us to do, grade 11, is to balance the accounts. You should never leave the accounts unbalanced, especially if the activity tells you to balance the accounts correctly. But you must remember, when you balance the accounts, all the balancing will take place at the end of the financial year, and then you change the date to the 1st of the next month again. So if we look at the vehicles account quickly, I just have to balance, so I get a total, so it will come to 959,000. So it's 959,000. Okay. I said we do the balancing at the end of the financial year, which is February the 29th. So we're going to balance carry down. Right, so then we get, all we have to do, we just have to subtract. So it's going to be 959 minus 380, gives you the 779,000. Then you change the date, 779,000. Change the date to March the 1st. But this time, that was 2015. And this is March 2016. That was August 2015. But this was Feb 2016. Okay, you just write the word balance in the details. And then you have the balancing done. So the vehicles account is completely balanced. You applied the going concern principle while you were balancing, and you were recording all the vehicles at historical cost when you bought them, and when you dispose of them, you recorded the vehicle at the historical cost, at the cost that you bought the vehicle for. So the vehicles account is complete and balanced. Should be an easy account for us to do. It's just a matter of opening balance, split the two, and then you'll get it. Okay? And in the same way, we have to balance the accumulated account. Right, so we have to add this over here on the credit side. We get that total, we get 388,000. We balance at the end of the year, so it's Feb 28 or 29. And that balance will just be the difference between those two figures, which will give me 316,000, which is 388 minus 72 gives me the 316. So that will be 316,000. Okay, so the vehicles account is balanced. The accumulated depreciation on vehicle account is balanced. Then the only thing that we must still do, we must complete 1/2 of the double entry for the depreciation account, and then we've got everything done. Right, so 1/2 of the depreciation account, which means we must still write off the depreciation at the end of the year, meaning this over here, depreciation at the end of the year. It's going to be accumulated depreciation on vehicles. That was 78,250. Okay, depreciation is the nominal account. Okay, so all nominal accounts will close off to profit and loss. So at the end of the financial year, we have to close off the depreciation account. So it's going to be February the 29th. Profit and loss, and it will be this total, which will be 90,250. $90,250, and once again, it will just be general journal, general journal, general journal. Let's just see if there were some questions quickly. Okay, then grade 11. Just to recap quickly, the item that's very important is for you to identify how to write off depreciation on the cost price or the diminishing balance. Cost price or the diminishing balance. Then just to recap on the activity, we took the opening balance of the vehicles and we split them between 180 and 579,000. 579,000 was the amount that you had to calculate because the sum of those two added up to 759,000. And then in the same way, I took the balance of the accumulated, the 297,750, and I split that between 60,000 and 237,750. The items that I have circled, the 180 and the 160, those are the items that were given, and the items that's not circled, those are the items that you had to go and calculate simply by just taking the opening balance minus the item that we have circled. Then it's just writing off depreciation for 6 months, adding it to the accumulated, and then taking that item to asset disposal. I hope this activity has opened up a bit of light so that you can see how depreciation affects the accumulated, and eventually it will affect the asset disposal account where you have to determine the profit or loss on sale of asset. This is a very important section of the work. It gets carried over to grade 12, and then you need to understand what you do. It's very important for you. If you were struggling, you need to go over the exercise again, make sure you understand. You need to master this section of the work.